Traders, what's going on, traders? This is Shocks and this is Shocks Capital FX. So today, guys, we're going to be talking about a fascinating and interesting concept of order flow. Guys, if you are new here, consider subscribing, turn on your post notifications, and don't forget to like, subscribe, and share. Guys, let me define what order flow means. So order flow defines the amount of orders waiting to be executed at a certain price level. So what I mean by that is we have levels. So the levels I'm talking about are horizontal levels. So these levels determine where the price or the orders are residing in a market. So how do we spot these zones? How do we know where orders are residing? Break in market, retracement, and you are in. You want to know more? Stick around and I'll show you how. So guys, let's go into charts and explain this thing. So before we go any further, guys, we are not going to be using any indicators for this concept. We're just going to be using our naked eyes to spot these zones with accuracy, and when you look at my chart, you are seeing these yellow boxes representing some zones. So these zones which I have marked here are called demand and supply zones. So these zones determines that we have some unfilled orders in this zone. We have orders waiting to be executed at each and every particular zone. So how do we know if banks and institutions are buying into the market? We see a very big rally up, a very big move in the markets. If they are selling, we see a very big drop, and if they are buying, we see a very big rally. So this is what we are using to spot our zones. So whenever you see these big rallies, you know that the institutions and the banks are involved in a market. So you need to spot where these rallies and drops would have initiated from. So where they would have initiated from, the pauses which they would have originated from, those are your zones. Those are the zones we are talking about. So let's take, for example, this is a drop, this is a drop, and this is a drop. So let's consider this drop for a while. So this drop happened in a market, and this drop was caused or was initiated from this demand zone which I have marked here with a yellow box. So this big yellow box is this small candle in it which we call order blocks or a supply zone. So this is the candle or the zone which you are marking out into the future and waiting for price to come back to that zone. So the whole concept behind this retest model is that if the banks have bought or have sold in this candle and price has gone up, we are assuming there are orders which were not filled. Why? Because the banks have a large amount of money and they pay that amount of monies with retail money, so they cannot fill their orders at once. So we are saying we have some pending orders of big banks and institutions residing in this zone, and what we are waiting for is we are waiting for price to come back to that zone, take those unfilled orders, and we place our orders with the unfilled orders and we profit with the big banks. So this is what we are doing. Look at this drop. This drop is the drop we are looking at. This is the rally which was caused by institutional money. So we look at where this drop would have initiated from. This would have initiated from this candlestick right here you see on top, and you wait for price to come back to that zone and sell again. So you see the aggressiveness of the move will determine whether the institutions were involved or not. That's why we are looking for rallies and drops in the markets. So those ones are the ones which will tell us where the institutions are doing business. So these ones, I call them areas of doing business. Why? Because that's where you need to be doing your business. You don't need to buy or sell at every area on a chart, at every area, any zone. You need to clearly understand what's going on, understand the bigger picture. And the bigger picture is the institutions are only involved where price has moved a significant lot of rand. So this is what we are talking about. Let's look at other examples. So before we mark this chart, guys, let me tell you something. Analyzing order flow or supply and demand, you are looking at zones where decisions have been made. So when you see a drop or a rally, know that a decision has been made, and a decision is made where there is a pause. So when you see these pauses in a market, you know decisions are made when you see price going down or price going up. So you need to see aggressive moves from these pauses. So if you see an aggressive move coming out of a consolidation like this, you know a decision has been made in this consolidation, and you are waiting for price to make a retracement to that zone. Then you sell or buy depending on the direction you are going with your price. Okay guys, let's look at more examples and see how we can use this model or this powerful concept of order flow to trade. So number one, you are looking at zones which have aggressive price moves from the zone, and you are looking at a zone where you are having a pause of at least 2 candles, and this is the zone you are looking at. And the other tip is you are looking for the last opposite candle responsible for that aggressive move, and this is what we will be calling supply, demand, or order blocks, depending on which is better for you. So guys, this is the aggressive move which broke market structure. So you are also looking for that break in market structure, an aggressive move, and you are waiting for a retest. So the essence of this method is you will be setting and forgetting your orders. You will be also putting pending orders on top of your zones if it's a demand zone, and you will be putting your sell orders under a supply zone, etc. So you'll be putting sell limits and buy limits. This is the method which you will be using to enter your trades. So you're just looking for these zones, and this is an aggressive move which broke market structure. So we are looking for this retracement back into the zone, then collecting or activating your order, and you are looking for an aggressive move down. So this is what you are doing, guys. You are looking for high probability zones in line with order flow. So order flow is determined by the aggressiveness of the move. So if the move is high, you know the order flow of big banks, institutions is in that direction. So you are only looking for those big moves, for those big drops in the markets. This is a big move which broke market structure. You are just waiting for a retest back in that zone, and you are looking for your 1 in 3 risk reward ratios, 1 in 5, 1 in 10, depending on the range you are working with. Let's look at another example. So guys, this also works on any time frame. So this is the M15 time frame. Let's see what we have here. So this is the pause which caused this aggressive move up, which broke market structure, as you can see, breaking market structure, and you are waiting for this retest, and you are targeting the next high. So this is a type of trade which will give you 1 in 10 risk reward ratio without any sweat. So let's look at another example. This is a zone which caused this aggressive move down, which you see, which broke this market structure, and you are looking at this retest which came here, and your stop loss is going above the supply zone, and your first take profit is your next major swing high. So this is what you are doing, 1 in 3 easily, and you are trying to look for aggressive moves. You are not trying to look only for aggressive move happen. You are also looking for aggressive moves where you are involved. So this is the aggressive move which has happened. This has happened, and you are looking for the next aggressive move, which is this one. So you are looking both sides. So here you could have entered this sell, and you could have entered this buy, and you could also have entered this sell. Look, you are having more than 3 trades in a week. This is awesome, with one pair using the same concept over and over again. So this is what you are looking for, aggressive move which breaks market structure. This is the aggressive move, but look where it started here, and price didn't get to get you in that trade. That would have been a miss. Happens. Let's look at another pair. Okay, this is, so on EG we are having this very aggressive move up, which breaks market structure, and the retracement triggers you in, and your stop loss is below the yellow zone. Your take profit is at the major high. So this is what you are doing, guys. You are looking for these simple trades with accuracy. You are just looking for the aggressive moves. aggressive move and you're waiting for your retest and catching the major moves in the market. You're following the big money. You're following the big money here. Look at this. Look at this. This is the what? The aggressive move. This is the aggressive move which broke what? Which broke market structure. This is the aggressive move which broke market structure. You're just looking for a retracement back in the yellow zone and you're looking for the major move of the market. So you are catching the majors. You are playing in the majors now. Welcome to the major league. This is shocks. So guys, major move, break in market structure, retracement, and you are in. Look at the moves you are catching, guys. Look at the moves you are catching. This is what you want to see as a trader, and you are looking at very healthy risk reward ratios as you go. So this is the concept, guys. This is order flow, following the big man. So this is how you trade order flow easily. This is how you spot order flow without any indicators, without anything. You're just using your eyes. You're just using your eyes to identify the major moves which breaks market structure, and you are just waiting for a retracement. You are not necessarily waiting. You are just setting your orders and maybe going to do something else and waiting for your orders to be initiated or to be activated by the market. So you are just setting and forgetting, guys. So thank you guys for watching, and don't forget to subscribe for more content like this. Like, share, and tell someone. Thank you for watching.